Hi everybody, it's Christian from Stone Education. Going to be looking at the euro against US dollar quickly, just to see if we can see any opportunities on this particular pair for the month of April. So, looking down at the hard right edge, we can clearly see that last month's candle, very much a bullish engulfing candle after the prior month of indecision. The indecision of we saw a lot of selling coming through, so this could have been emphasized as a potential selling sentiment candle because a lot of wick. And when you see a lot of wicks, it tells you, especially in this case on the upside, tells you there's a lot of selling. But if this was to be genuine selling, then we needed to see last month's candle closing lower than the body close of the prior month to that. And clearly you can see that was not the case. If I just pan here, you can see that the lows, clearly body lows, failed to materialize. So this could be taken as an inverted hammer. And an inverted hammer is a sign of positive strength. So if that was the case, then we need to see last month's candle trading above the body of the prior month's candle, and clearly that's what we saw. Week in, week out, further bullish sentiment coming for the eurozone, for the euro, against the US dollar, and that pretty much pushed the candle to the upside. And ideally, the target would have been the high of this candle here, and clearly that was the outcome. So overall, we've seen a lot of negativity. Price is actually broken or bounced off a consolidation or a range or channel bottom. Okay, here you can clearly see, take the highs, consecutively resistance levels and consecutive supports. So clearly a channel. Euro has been trading within channel for a long period of time, since 2008 in fact, and subsequently we've seen price correcting a number of occasions on the support of the channel low. And one thing I've yet to notice is when we saw price at the end of 2015 testing or driving lower than the low of the start of 2015, the RSI was clearly showing that there was no genuine selling sentiment in this case. Let me just change the color, because if you're looking at the RSI, which is plotting relative strength, it should be moving with price. So if price is making new lows, then you'd expect the RSI to be dropping with price. This is clearly not the case. Price is moving away. So as she's dropped, price has dropped, RSI has moved oppositely, which is not a good sign. So we have convergence on price at the support resistance level here at the channel low, and subsequently that told me that there was no clear selling. So we should have been looking for potential further pullbacks to the upside or bullish sentiment, and clearly that's been playing out over the last 4 or 5 months. So as it stands at the moment now, if we drop down to the weekly, you can see that price over the years has failed, or especially 2015, has failed to get above this level here at 114330 and change. So very much a resistance level high, and you can see that last week's close actually physically closed at that level. So looking ahead, if we are seeing genuine positive sentiment coming through or driving the market for the euro for 2016, as you can clearly see that's happening here with the intermediate trend to the upside, RSI is positive, MACD is clearly positive. However, we are trading at a resistance level high and a yearly resistance level high. So looking ahead, if we are to see this as a clear bottom for the euro and potentially a start of a new bullish trend, where we've seen bearish trend, a bullish trend, then we need to see this level here at 114330 being breached. We've traded above it on 2 prior occasions, but we failed to close higher. Here again, also the 50-period moving average was a resistance of price. Now you can see that the 50-period moving average is below price. So psychologically, that's also another confirmation that we're seeing positive sentiment coming through or driving through for 2016. Remember that the Eurozone has a physical or a quantitative easing program in play, has been in play for the last year and a half, and the ECB has now indicated that there's more likely to be further quantitative easing for the foreseeable future. So that bullish bias clearly is now forged out a genuine strong support within the Eurozone, and we're seeing that quantitative easing program starting to show or to reflect on the charts in terms of its positiveness. That's what it's meant to do. But having said that, not clearly out of the fire as yet. So as it stands at the moment now, we need to get above this box, this resistance level here, and look towards any week preceding. If we get a nice bull close above, we could see the prior week actually pulling back before we see a continuation. And if we do see a continuation, then the institution moving average here around the 124.47 mark would be an ideal target. And between the resistance level high that we currently have over here to your institution, you're looking in excess of 1,000 pips. Not going to get all of it, but clearly there's enough profit on the table to see a genuine return on time invested. But having said that, we need to see price actually tipping a hand, closing higher, confirming that we genuinely do have a return of bullish bias as it stands, and that would give us a clear indication that we should be looking for further highs. RSI, as I said to you, is above 50. Perfect. It's an oscillator, but the fact that price is trading above the RSI, above the 50 period moving average, the 50% level indicates that there's positive strength in this case. MACD, trend related. Clearly, the intermediate trend has been to the upside, swing highs recently, and the MACD is clearly depicting that sentiment. So, resistance level high here, what we can do is use the fib projection or retracement level tool, take the high of price back in 2014 before we saw the sell-off to the low in 2015. You can see that the 23.6 level has been breached. However, if and when we do get a close above this psychological level here at the 1143 and change level, then we could be looking for price to move towards that 38.2 level, which is roughly 340 odd pips. Get above 38.2, then we're moving towards 50, and by the time we get to 50, obviously price is moving higher, time is moving sideways, and we could see a confluence where we see the institution meeting up with a 50% fib retracement level by that stage. So viable targets on the table right now if and when we get a close above the 114330. So here again, sit back, be more passive in terms of entry, wait for a nice confirmed break above, see if everything still tallies up, and then pull the trigger. Hope that's helped. Enjoy the remainder of your week.